Alright, what's going on, everybody? It is Saturday, June 1st, 4 o'clock, just about. I am extremely sick today, but we're going to go ahead and do this weekly Outlook video and take it from there. First, everybody knows the SPX and the broad indexes got hammered pretty hard into close on Friday. Kind of ironic, though, that this happened because if you look at my chart here, you got the trend line of the lows, really nice looking trend line there, frankly. But what I'm seeing here is I drew a little bracket from the start of the new year, which was our first real bullish setup, all the way to where we are now. And right around every 38 days, as you can see from the brackets, 37 days, 37, 38 days, we get the fade play to reset everything, and then we start getting bullish again, and we go right back up. Now that's real important because that's kind of telling me what we're going to be doing now. Look, it's set up literally perfectly. Today is the 1st. We open up on Monday. Will be the 3rd. From there to the next clear of the bracket would be the 11th. So that'll give us what, like 7, 8 trading days, something like that. So 2 weeks before the next real uptrend begins. That sounds pretty good to me. But anyway, in any event, that's kind of what I'm looking at for that. Ideally, I would like to see a move into the 159s. I think realistically that is pretty attainable. But my ideal target, just based on wave formation and what I think we're looking at, is 158 to 156. But I don't know, that might be a little far-fetched before we start bouncing again. But anyway, I expect us to see around the 159s, and then we'll bounce back into the 162s, and then from there we'll go back down. I do expect a continuation on Monday. If we don't get a continuation on Monday, and we bounce on Monday, then this ideal target's probably going to be nullified. But we will likely see the continuation to the downside on Tuesday instead of Monday. Realistically, it's happening before we go any higher. Ideally, I'd like to see it happen quickly for volatility's sake, but you don't always get what you want, unfortunately. I will say the reason why I have my target for 159 or 1590, whatever you want to call it, is if you look at this is a what is it, a Fibonacci thing majiggy. God, retracement. I don't know why that just brain farted. But our first real run up started on what was it? December 31st was when we really started the whole bullish pattern that we're in right now. We hit the high, and then we retraced just under 38.2%. Okay, then let me delete this real quick. Then we bottomed, we reversed, we went up, established new highs continuously, and then we retraced over 50% of that particular leg, that run there. Okay. So now, what I'm looking at here is the first retracement was 38%. The second retracement was 50%. So now this one, I kind of anticipate us being in the 60%. Obviously, it doesn't work like that, but then again, you also don't get a 37, 38-day cycle. That works out pretty well. So that's just kind of my theory at the moment, but everything's looking good for that so far. Now we get into the individual stocks and everything, and what's really going on there. This Netflix is in pretty deep water here, realistically. Um, it's in a triangle formation, much like what the SPY was in prior to the move down. Um, Netflix needs to sustain or hold rather this low of 209.91. If that breaks, then I think you could see some gap fill here. Realistically, though, you're gonna get a move down from Netflix this week. It's just the nature of the beast. I do expect the techs overall to hold up pretty strong, but again, I like this Netflix short to 210, 215, but we'll see. Amazon, Amazon's just been freaking crazy. Um, over the last, God, since the beginning of the year, just been unreal crazy. There's no real rhyme or reason to its chart lately. It seems like you got the gap here in the 264s, and then after that, you just realistically you have a ton of room to go back down to the bottom of this trend line. I don't really think it does. I think it kind of sits in the 250s before making a move back up. I think it's got a lot of support around here. Doesn't really like to break away from that, as you can see. Just if I were to just take this and bring it all the way. See, it doesn't really like to break below that too often, but we'll see what that brings. Bank of America. I mean, most of the banks have similar charts here lately. Obviously, they're all running in tandem with the SPY. I don't really like this Bank of America overall, only because, it's a fucking 13-cent stock, and that just frustrates me. But I like it to head lower. Goldman Sachs, I have very, very high hopes for. If I'm right and the market reverses on the 11th, then that was a terrible drawing, but excuse me. Then it shouldn't really see below 146. This is going to be a pretty big move for the markets here. This fade that we're going to get, it's going to be pretty big, and it's going to move a lot of things around and shake up a lot of people. But that's only because of how massive our run-up has been over the last 3 months, 4 months now. Well, no, 5 months, wow. But that's what we're looking at right now. This Goldman Sachs overall is incredibly strong, so I expect to see a lot of people buying this up towards the bottom here, and we'll get a nice push back up. We do have some support around 155. Just for the sake of argument, I'll say 153 might be a tough nut to crack. If that's the case, then when we do reverse, those 160s and 165 calls are going to be pretty big payout. LinkedIn, I didn't even actually take the time to draw anything on this chart, only because LinkedIn is set up to fall off the face of the earth right now. Realistically, we're probably looking at what's about to become a 10 to 15 point move next week to the downside. Realistically. Let's see. I can't draw support here because it broke, so we have support at that bottom, which is 164.17. After that, we're probably looking at a bounce at 154. And then after that, 140s come. We close that gap eventually. And then it's time to load up. Visa is in a very similar position from the SPY. Some nice support around the 176 area over the last couple weeks. I Ironically, though, it didn't do great on earnings, and now it's up huge. So I think what we're looking at realistically is probably a move to 170. Right around there, close this gap maybe to 168. I think that's probably the max pain. I mean, that is an 8-point move, but it'll finally pull a directional move instead of this bull crap of a chop that we've been seeing the last couple of weeks, which has literally frustrated me and taken my money. Google went up way too high, way too fast. Frankly, even though it looks like it bottomed out today and held the 38.2% Fibonacci retracement, I really do think that it's got more to the downside here. I've been calling for 850 for a while now, and I do believe that is where it will stop and start looking good again. So that's roughly a 30-point move. If the SPY falls off like I'm expecting it to and gives us 1 or 2 days of big movement to the downside, I think this Google will be a huge, huge play. Apple looks good. Apple's looked good for a while. It finally had a nice string of movement over the course of the week. Unfortunately, did not completely break out because the SPY crapped out. I think realistically, if Apple holds around 440, which would be like roughly a 40% retracement, if Apple holds 440, I'll be pretty happy and really, really bullish. We did notice that a lot of buying activity going on towards the end of the week. Did look good. If Apple does not hold 440, then just assume that it's going down to 433, which is the next Fibonacci line. This price line kind of has the kiss of death, much like what Google has. You kind of have a makeshift triple top here. Even though I don't know if that would actually categorize as one. 72. It's pretty damn close. But you got some basic support towards the 780s. It's going to get a big freaking 20-point fade play. It's going to be a huge fade. This is one of those situations, much like Google, that just went up way too fast without any real basing or formation going on. Just kind of decided it wanted to run, and it did. And it actually pulled over 100 points, almost 200 points in a little over 2 weeks, I think, which is pretty crazy. So realistically, I like a move to 780 again. I want to watch the price action there, but if that does look weak, then we're probably looking at about a 50% retracement before the next leg. Baidu is in a general downtrend over the past couple months or so, unfortunately. It does have support at that current low of 82.98, so basically 83. And it does have support at the 50% retracement from the looks of it. So I think that's a safe place to make my bet at a 92.19 target for now. Fossil, I hate Fossil, but for the sake of argument, it's got support at this current low of 102.11. I do expect that to break. I do expect it to close this gap, but I mean, there's not much room for a big money play unless you want to grab some like 100 puts. But even then, you're looking at $1 for them. That's really not worth the play, in my opinion. Not yet, at least. Caterpillar, I'm not even going to talk about. IBM. This one's really interesting because they absolutely bombed on earnings. And yet now they're up over 20 points since then, after posting terrible earnings that flushed the stock 20 points. They're up 20 points. So, for the sake of argument, I do believe that it's got to move to 200. Excuse me. Oh, God, I feel terrible. I do believe it's got to move to 200. Probably 202.7 will give it a little bounce. From there, if that breaks, then you can see it on the chart. I mean, I'm going to post all this up on the blog for you guys to see and reference during the week. Lululemon, I love this stock, frankly. It's really, really strong most of the time. It's got great support around 74, which is only a 3-point move. I like that to base before everything resets. I think that's a really nice place to sit. It did hold up really, really well with the SPY crapping out. So this is something that I'm going to keep an eye on when we do reverse. Assuming it does hold that 74, I think we can get back to not only the 80s, but I think longer. I think we can get back to 90s and possibly even 100 over the summer. This low was created when they released their see-through pants, which was an accident, but I think it's hilarious. Citigroup, very, very similar chart pattern to the SPX and Goldman Sachs and Visa. Real similar in that, but not a lot of real strong support. A lot of green days because it's just been ripping with the SPY. I do expect this 50 to hold up pretty well. If that does crack, which obviously it's almost assumed that it would, I think the next real support would probably be in the 47s, or 48s rather, and then just kind of take it from there. MasterCard, another one, real nice bullish uptrend from what was that? All the way from last summer. This thing has been on a nice uptrend, which is great to see. Realistically, I have a target of 556 to 546, so it's roughly a 10-point target. There's no real support or basing system here. I really, frankly, didn't even think it was necessary to write Fibonacci retracement on this chart. Just a perfect example of up too fast, too much, and just didn't make sense. Did create the new high, but I think we're looking at probably a 15 to 20 point fade, depending on what the market wants to do. Obviously, going into this week, very, very bearish, but we'll see. JP Morgan, I think we probably bottom around 50. Actually, no, that's too much. Probably 51. This thing is another one of those stocks that doesn't really like to pull any crazy point days, but will pull a 1 or 2 point day. So if the market's ripping to the downside, then this thing will probably follow suit and probably see a 3-point day to reset itself, which would be crazy for this. But we got some support around the 52.5s, and then after there, it's just a free fall, unfortunately. AIG, I don't want to talk about it. It annoys me. Tesla, I know a couple people got the Tesla short from that 114. That was an awesome play. Congratulations. Realistically, you're probably looking at a move to the 80s if this thing wants to follow suit with the market. Max pain would probably be 81, I would say, just off the top of my head. FSLR, I think it's just in its own damn world. First target would obviously be 51.2, which is the 23.6% retracement. After that, my numbers don't seem right now, but after that, realistically, the strongest support that it's got is in the 46s. But this thing will pull a freaking 5-6 point day just because it's in the mood. This SCTY I'm not going to talk about. SPWR, not going to talk about. LVS, I don't really play all that much, but It's in a nice uptrend. I would say probably 54s would be my target if I was going to play it. And MGM has a gap down at 14.16. So I would expect, or 14.35, excuse me, I would expect that to probably get hit. What I will say is something that I'm kind of cautiously looking forward to is seeing what the hell this Fannie Mae does this week. Yeah, the chart is just ripped out of its mind, retarded and crazy. But it'll be very, very interesting to see what happens. My uncle has a bunch of shares from, I want to say 90 cents maybe. But I don't think he sold yet because he's an idiot. But that's all I got for you guys right now. I'm going to put all these charts up and a nice little detail about them on the blog. And like I said, I feel like death. So if you need me, email me or tweet me, and I'll get back to you as soon as I can. Other than that, enjoy the rest of your weekend.